Welcome back, students. This is Dr. Mercado. This is Accounting 1329, Payroll and Business Tax Accounting, and this will be my final lecture over Chapter 5. This is Lecture 5B. This is the second week that we are covering Chapter 5, which deals with unemployment compensation. So the last problem that I'm going to be covering is a little bit challenging, okay? And I believe you are going to be seeing this problem in your final exam. Okay, not in your upcoming test, but your final. So it is very important that you do know how to complete this problem. It is a little bit challenging. That is why I'm going over it, okay, with you. Okay, so let me jump over to the problem that we're going to be covering. It has a lot of information. Okay, so this problem says Marlon Grady and Pauline Monroe are partners engaged in operating the G&M doll shop, which has employed the following persons since the beginning of the year. So we have Hoffman, who is a general office worker, making $1,700 per month. Drugan is a saleswoman, making $15,000 per year. Beater is a stock clerk, making $180 per week. Egan is a delivery man, making $220 per week. And Lynn is cleaning and maintenance, part-time, making $160 per week. Grady and Monroe each are paid a weekly salary allowance of $950. Now we need to be very cautious here because on the first sentence it says Grady and Pauline are partners. And what are partners? Any payments made to partners are not taxable for FICA tax purposes, okay? So we need to make sure that we remember that. The doll shop is located in a state that requires unemployment compensation contributions of employers of one or more individuals. The company is subject to state contributions at a tax rate of 3.1% for wages not in excess of $8,100. So, for SUTA tax purposes, we're going to pay SUTA taxes on the first $8,100 of wages. Okay, they give you here the $8,100. Okay. Compute each of the following amounts based upon the 41st weekly payroll for the week ending October the 11th. Okay. Now let's start with requirement A. We'll go one requirement at a time because there's five requirements? 2, 4, 5, yeah. So it says amount of FICA taxes, both OASDI and HI, to be withheld from the earnings of each person. This is back from chapter 3. Okay, so in our payroll class, we're only covering 6 chapters, and they're cumulative. So we are expected to do calculations from prior chapters. So your OASDI and your HI calculations are from chapter 3 if you need to go back and refresh your memory. Okay, so they've provided us with a list of employees: Grady, Monroe, Huffman, Drugan, Peter, Egan, and Lynn. And we have to calculate the OASDI and the HI tax. That is the first requirement. So I have copied that information over here, and that way I can work the problem out. Okay. Now we do know that the OASDI tax rate is 6.2%. Okay, and the HI tax rate is 1.45%. Now, before I even begin working on the problem, I need to calculate my taxable earnings. Okay, now it's important to note. Okay, the first person listed here is Grady. What is Grady? Grady is a partner. Okay, partner. Let me see if I can spell partner. Okay, partner. And it's not taxed under FICA. Okay, so taxable earnings 0. Okay, partners are not taxed under FICA. This is a partner, is not taxed under FICA. Okay, that way we know why am I putting a 0 there? Even though we gave them $950 a week, okay, these are partners, and we are not going to be taxing them because of different law regulations under FICA, which says we do not tax partners. Okay. Okay, so now we go to Hoffman, who's a regular office worker. Okay, Hoffman gets paid $1,700 a month. Okay. So now I need to figure out how much does this employee get paid a week because they're asking us for the weekly payroll. Okay. So to do that, I'm going to go ahead and I'm going to multiply that by 12 months. And then that's going to give me, let me see, 1,700 times 12, 20,400. And then I'm going to divide that by 52 weeks. Okay. So we've got the 20,400, and then I'm going to divide by 52 weeks. So that's going to give me 392.307. Always look at that third digit. That third digit is a 7 because it's greater than 5. I'm going to go ahead and I'm going to round up to 392.31. Okay? So that's my weekly pay, 392.31. Okay? So that's the calculation for getting my taxable earnings per week. Okay, how much am I going to get paid per week? 392.31. Okay. Now, let's look at that was Hoffman. Now let's look at Drugan. Drugan gets paid 15,000 per year. Okay. Drugan gets paid 15,000 per year. I'm going to go ahead and I'm going to divide that by 52 weeks. And let's see what that gives us. 15,000 divided by 52 weeks. That gives me 288.46, okay? 288.46, okay? Now the rest of the employees for Peter, Egan, and Lynn, they've given you the weekly pay, so you don't have to do any calculations. I'm just going to transfer that over. Okay, that way I have my weekly pay here in my taxable earnings column. Okay, so now I know how much each employee is going to get paid a week. Now I can multiply my taxable earnings times my rate. Now none of these employees, remember we have an OASDI cap of over $100,000. Okay, none of these employees are in that range, so we don't have to worry about going over the OASDI range. Okay, so all of these employees are making very low amounts. Okay, so now what I do is I'm going to multiply my taxable earnings times my rate. Okay, and we're going to keep it at 2 digits, so I'll be 2432. Okay, so I'm going to multiply my 288.46 times 6.2%. Okay, 1788. I'm going to multiply my 180 times my 6.2. That gives me 1116. I'm going to multiply my 220 times my 6.2, 1364. And I'm going to multiply my 160 times 6.2. That gives me 992. Okay, so all I'm doing is getting my taxable earnings times my OASDI rate of 6.2%. Now, I'm going to do the same thing for HI. I'm going to get my taxable earnings times my HI rate of 1.45%. Okay. And we're going to do that for each of them. And because I am using Excel, I can just copy the formula down. So all I'm doing is just multiplying your taxable earnings times your HI rate of 1.45%. That's all I did. That gives me those numbers: 569, 418, 261, 319, 232. Okay, so let me just show you in the calculator one of these numbers. Okay, so let's say I want to do my HI for Egan. For Egan, it's 220 times 1.45%. That gives me 319. Okay, let's do Beater OASDI. Okay, so Beater is 180 times 6.2%. That gives me 1116. Okay, so all we do is we multiply the taxable earnings times the respective rates. Okay, once I'm done there, I'm going to get my total here of how much my taxable earnings are. Okay, my taxable earnings are 1,240.77. Okay, and remember to always exclude your partners. Those are not taxable for FICA purposes. Okay, so that is the first requirement. They're asking you to calculate your OASDI and your HI for each of the employees. And we've got that recorded there. Okay. Now requirement B. What is the amount of the employers? So this is how much we're going to deduct from the employee's paycheck. Now we need to figure out how much is the employer taxable for. Okay. How much is their payroll tax for OASDI and HI for the employer? Okay, so I know that my taxable payroll is 1240.77. We calculated that in step number 1. Okay, so my OASDI, what are we going to do? Well, we're going to multiply the 1240.77. Sorry about that. 1240.77 times my 6.2%. Okay, and your HI, we're going to do the 1240.77 times the 1.45%. Okay, so that's what we're going to do. So let's get those calculators out. 1240.77 times 6.2%. That gives me 76.93. And I'm rounding to 3 because that third digit is a 7. So 76.93. Okay. Now for HI, we're going to get the 1240.77 times 1.45%. That gives me 17.99. Okay. So these are the amounts that my employer is liable for OASDI and for HI. Okay. Very straightforward. Now, requirement C. What is the amount of state unemployment contributions for the weekly payroll? Okay. Now, before I calculate this, we need to figure out how much has these employees earned as of the 40th paycheck. Remember, we are on the 41st weekly payroll. So I want to know how much each of these employees made as of the last payroll. Okay. So I'm going to go ahead and we're going to get, and we're only taking into account the actual employees. I'm excluding the partners because those are not taxable. Okay. So I'm just picking up the actual employees. I got their weekly taxable earnings, which we had already calculated. And I'm going to go ahead and I'm going to multiply that by 40 because I want to know how much they've made as of the 40th paycheck. Okay. So this number represents your year-to-date earnings as of the paycheck before this one that we're doing the 41st. So I want to know how much has been paid before this paycheck. So let's multiply each of those by 40. That way I know how much we have made before this paycheck. Okay. So these are my year-to-date earnings as of the 40th paycheck. Okay. Now let's go to letter C. It says, what is the amount of state unemployment contributions for the weekly payroll? Now, let's look at this. For the state contributions, we are paying taxes on the first $8,100 of earnings. Okay, we only pay on the first $8,100. Anything above $8,100, we don't have to pay any taxes. Okay, so let's look at these numbers. Okay, Hoffman is over. Okay, so we know that we're not going to charge Hoffman any more state unemployment taxes because he's gone over the 8,100 limit. Druger has gone over the 8,100 limit, so we don't have to pay any taxes. Now let's look at Beater. Beater has earned $7,200. This week he made $180. Okay, so that means that $180 that he paid are still taxable for SUTA tax purposes. Okay, so for SUTA tax purposes, Beater has not reached the cap yet. He's only at $7,200. Okay, so that means that the 180 that he earned this week is going to be taxable. So I've got G Beater, okay, at 180. Okay, the $180 that he earned this week are going to be taxed. Okay, and then I've got Egan. Egan has gone over, so I don't have to worry about Egan because Egan is at 8,800 and we only pay up to 8,100. And then we've got Lynn. Okay, Lynn has only earned $6,400. He hasn't reached the $8,100 cap yet. So that $160 that he made are taxable for SUTA tax purposes. Okay, so those are your two items that are taxable. I'm going to go ahead and I'm going to add them together. That's $340. So then my SUTA tax is going to be your $340 times your rate, and the SUTA tax rate is 3.1%. Okay, and let's see what that gives us. 340 times 3.1%. That gives me $10.54. Okay. So that is the amount of my pseudo taxes, $10.54. Okay. So it's just a matter of identifying who has not reached the $8,100 limit in this particular case. Okay, whoever has not reached it, those are the amount of taxable earnings that will be included. Anybody that is over the $8,100 are not liable for any pseudo taxes anymore. Okay. Now for FIUTA, for letter D, what is the amount of the net FIUTA tax on the payroll? Now remember, for FIUTA, we pay taxes on the first $7,000 of earnings, okay? So we need to look at these employees, okay? Are they over the $7,000 range? If they are, then we're not going to charge them any taxes. So Hoffman is over, Drugan is over, Beater is over, Egan is over. All of these, we're not going to charge any FIUTA taxes on them. But we do have Lynn. Lynn has only earned $6,400. Lynn has not reached the $7,000 threshold. So that means that those $160 for Lynn that he earned this week on the 41st paycheck are taxable. So for FIUTA tax purposes, Lynn is going to be charged taxes on the $160 that he earned. So your FIUTA tax, your net FIUTA tax is going to be on $160 times your rate of FIUTA is 0.6%. So that is going to be 160 times 0.6%. That gives me 96 cents. That is the amount of your FIUTA taxes. Okay. And why only on Lynn? Lynn is the only employee that has not reached the $7,000 limit for FIUTA. Okay, so because he has not reached it, he has to pay taxes until he reaches $7,000. All of the rest of my employees have exceeded the $7,000 threshold, so that means no further FIUTA taxes have to be paid. Okay. Now, letter E is they're asking you for the total amount of the employer's payroll taxes for the weekly payroll. The key here is the employer's payroll taxes. Okay, so I'm going to go ahead and I'm going to pick up my FICA OASDI, which was $76.93, okay, which we calculated in requirement B. Okay, then I've got HI of $17.99, which we also calculated in requirement B. Okay, so I'm going to put here, this is coming from letter B. This is coming from letter B. Okay, pseudo is coming from letter C. Okay, and my pseudo was, let me see. Okay, your pseudo was 1054. Okay, your FIUTA is coming from letter D, and your FIUTA was 0.96 cents. So that means that your total taxes is going to be added is $106.42. Okay, 106.42. That would be your total taxes for the employer payroll taxes. Okay. So this is how you calculate or you solve for this problem. The key here is basically identifying what is taxable and what is not taxable to calculate letters C and D. For purposes of this problem, your pseudo has a limit of $8,100, so you have to figure out who has reached or not reached that $8,100 threshold as of the prior paycheck. Okay, if they're over the $8,100, then we are not paying any taxes. If they are under, then that's the portion that is going to be taxable, and that is where we determined that Beater and Lynn had to reach that $8,100 cap. For FIUTA, we always have a cap of $7,000. Okay, for FIUTA, it varies by state, so depending on the problem that you have, that will vary. But for FIUTA, it will always be the first $7,000. And the only employee that had not reached $7,000 was Lynn in this particular example. Okay, so I've got all of the calculations here. I hope it helps you in completing your homework and understanding it a little bit better. If you all have any questions or concerns, please do not hesitate to contact me. I am here to assist you. I hope all of you have a productive rest of your week. And until next time, thank you very much.